guys. November 3rd, still cooking outside, but it is officially fall. Pool cover is on. That means we've been here for 3 years. So much has happened in the last 3 years, but that's going to be for another video. We're going to talk about three things. One, huge upside target in Tesla. Hi, E.G. Happy 3 years old.
Can you show me with your hand?
So again, three big things. A huge upside target in Tesla going crazy. Number two, possibly did I do the first virtual options trade in history? And three, I have a new partner for the wealth management business. I want to introduce you to him. Let's jump in.
Man, the myth, the guy who's got to deal with me for, dude, we're pretty much getting married. I'm sorry. Ryan Boucher, what's up, man?
What's happening? How are you doing?
All right. Any regrets?
No way. No way. This has been, the good news is as much time as we're spending together, we are spending it virtually together. So it's on videos, it's on calls. So it's, maybe more manageable than being in person, but no, it's been great so far. And I know going through a lot of those early days, how much time we were spending talking and brainstorming and kind of putting this entire vision together of what we're building. And, those were exciting times. Not that it was long ago. I mean, we're still in the thick of it and still super exciting. But those times spent together and really kind of bringing this vision to the table has been, it's been great so far. It's been really, really exciting and just fun to do.
Thanks, man. Thanks. I appreciate that. And I feel the same way. Like, we're both obviously hard workers. We love the industry we're in. But to be excited about something that you're building from the very ground level, I felt this way when I first built trading analysis and did that for 10 years. And man, I love it. It's always my baby, but to start on something fresh has been awesome. And, I think Ryan has so much experience that I'm lucky to have him. I really, really mean that. Like he's got experience at a large RIA, which again is registered investment advisor. It's the new age of wealth management. He's got a lot of experience. He's a CPA. He's a CFP, which is a certified financial planner. I'm sure you know what a CPA is. So he brings a lot of planning background, which really complements, my skill set, which is not in financial planning, but in markets. It's all I've ever done. Right. Talk a little bit about your background, if you would.
Yeah. And one of those elements of just the excitement of coming together and working with clients as long as I have and working with business owners and seeing what's made them successful. But in many of those businesses, in many of those cases, some that I've worked with professionally, no personally, it's those partnerships where the skill sets complement one another and they can bring it together. And I think, one of the elements that made us coming together so important and so exciting is, as you alluded to, your background in the markets, what you've been doing on the investment side. I've had my hand in investing over the last 9 or 10 years, but a lot of my experience has been helping run the operational side and running an RIA, but also in-depth planning, being a CPA, coming from a tax and more technical background, having that experience with really the full on suite of wealth management services, the investment side, the planning side, the tax preparation, you name it. And so being able to do this with you and in your passion and background with the markets and portfolios, the skill sets complement each other so well that, as we've come together and as we're building it, even just the focus on getting it off the ground has been really instrumental, that we can kind of focus and hone in on our strengths and really kind of build out the infrastructure, how we envision it. And, being able to start from scratch and having that blank sheet of paper to start from has been, it's been fun so far. And, my background, as you said, is my first 5 or 6 years in corporate America was spent at a Big Four accounting firm. I was at E&Y. That's where I got my CPA and really honed in my tax background. And then the last 9 or 10 years has been at a larger registered investment advisor and had experience there. And so, always had sort of that entrepreneurial spirit. And again, being able to come together here, really put that firm vision, sort of how we envision in this new age of wealth management and investment management, has just been an opportunity that I think so far we've both embraced. But it's it's really been, such a fortunate timing of coming all together.
Yeah, absolutely. It just be able to the technology, and Ryan's in Boston, by the way, and I'm in upstate New York, as you guys may know. The technology that's available to us, to you, to mom and pop, our parents, is amazing. The way we can communicate online with the bandwidth in the internet going the way it is, with 5G coming, the technology, the boom that we're in. It was happening pre-COVID. COVID accelerated it. We'll talk about the markets here in just a sec. But the ability to communicate frequently and often, the clients that we've brought on, we're in contact with them a lot. And it wouldn't be possible if it was just an in and out of the office, make an appointment with the secretary, walk up the stairs to the old stock brokerage office. We have a lot of points of contact. It's very easy to be in contact with clients. So we're in a soft launch. We're up and going. We have clients allocated in 2 portfolios. We're building a third equity portfolio, which we could talk about later, sort of a interesting hedged equity portfolio. Ryan is working really hard on these platforms that enable the independent advisor to do all sorts of things in terms of manage client accounts, do financial planning. There's so many different, they call them fintech, financial technology platforms that support what Schwab offers. That it really enriches our ability to service clients and us to stay organized and to run a virtual shop. Talk about that. You've been hard at work working these different systems.
Yeah, this is great. And you brought up Charles Schwab. I've worked with Charles Schwab the last 9 or 10 years. So I'm very familiar with Charles Schwab. Great custodian. They're, probably the best in the industry. So I love that we're going to be able to use them, as well as bring on some of TD's technology and their background. It's going to be a nice merger when it's all settled, again, probably in this coming year or so. But on top of that, what we can bring to clients, so assets will be at Charles Schwab. We're going to bring in higher level reporting so that they'll have client portals that'll be on their tablets or their mobile phones. They'll be able to access much better data and information than they would typically that the custodians offer. We're also going really hard into some great financial planning tools and software. And so all these things coming together, these are all on the cutting edge of what's the latest technology that's being offered to wealth management firms, big and small. And it gives you and I the opportunity to, work whoever's out there that, wants to work with us. It just gives us so much more capabilities to work with clients. And it's going to be such a great user experience. It's going to be a great, just from the capabilities that it's going to bring to the table. And then, you add in all the portfolio management and what we're doing there, building out the different strategies and portfolios. It's just going to be a great mix and a great user experience. And that's what I keep thinking about as we're kind of bringing these things to the table is what's that end user experience look like? And how can we enhance it with the technology that we have at our disposal? And they're going to be awesome offerings. It's really an amazing what we can bring at our size right now.
It's awesome. It's so good. Again, guys, I got to tell you, I'm very fortunate to have Ryan aboard. I couldn't do this alone. And in this current phase, we're still in a soft launch. We are onboarding clients who have been waiting, who have been kind of following my work online through all the various channels, CNBC or online or whatever. So we are in a soft launch. These are clients who've been waiting. Their portfolios are allocated, and Ryan's working on doing financial plans for those clients. So we really appreciate that first wave of clients who trusted us to come on board early. And we've been very happy with the way things have gone. We've officially been open for about a month. And as soon as Ryan gets everything complete, gets me up to speed with what I need to know, and vice versa on the portfolio management side, we'll go into the next phase, which will be a hard launch. So actually beginning to market. So this isn't even a marketing video, really no call to action, just kind of updating you guys that have a wonderful partner, really excited. We're such complementary skill sets. He's a great dude. One thing, got to tell you, I know all of you guys love my name, Inside Edge. Ryan's like, dude, I love everything about you, working with you, but we got to change the name. So go ahead, Ryan. Tell him why you made me do it. I'm totally kidding.
So no, I mean, this is one area that I think as partners, and I think it was a hard concept to work through. And no, it's been such a positive experience. But as we just talk about, hey, what are we trying to build, and what does that future look like? I think it changed a little bit the dynamic. And so I know we've been working over the last few weeks on a branding and naming strategy that I feel very, very good about. I feel very comfortable about in terms of really bring that vision to light, bring it to the table, and one that feels like I think it's really aligns with what we're trying to do with this firm. And I think the overlap and what we're doing and the rollout, I couldn't be more excited. Concepts awesome. and what we're doing is just it's great. It's cool. And so I think everyone is going to be excited too.
Sorry, I can't wait. The firm name was Inside Edge Capital. I'm looking. I just got this year's latest ski racing magazine, Get the Kids Ready, and all the kids I work with. It was based on my ski racing career. And obviously that's not Ryan's story. He was a competitive lacrosse player. We have a name. We're working on a logo. Not ready to announce it yet, but the more I got into it, the more I began to love it. And it really, the name I feel reflects what values we hold, the vision for the firm, where we are in this digital virtual world. I'm really excited about it. So that'll be coming out. Again, thanks Ryan for coming. I just want everyone to meet you. Just an update as to where we are. Psyched to be working with you, man. Really appreciate it. And we're going to have a lot of fun, building this shop the way that we want to run it. And I just always work really hard at something that you enjoy doing, and it's cliche to say it, but then you don't really feel like you work. We've been hammering back here. I know being quiet on social, but we've had to with regulatories getting everything, the regulations set up, but also building the firm that we'd be proud to put in front. So anyways, Ryan, thanks for coming aboard, man.
Well, I thank you for that introduction. I think, current folks we're working with and everyone else watching this, can't wait to move forward with you. Can't wait what the future has in store. And it's just such an amazing time right now. So again, thank you. This is awesome.
Cool. Yeah, we'll get more details out there as we officially move into second phase, which is hard launch. So Ryan, we'll catch you soon.
All right. See ya.
In terms of inflation, they acknowledging that price increases have been more rapid, and I'm quoting them right now. I got to read it. Price increases have been more rapid and enduring than central bank forecasts, but still not backing off on the controversial use of the word transitory. Okay, so this is going to start in November and it should conclude on July 22nd. So Fed officials say they don't see a rate hike until tapering is complete. Markets are starting to price in a hike in May and June meetings, and then we start to see, according to the markets, a 70% chance of at least 25 basis points by July. And of course, this can always change. I've seen this Fed rate calculator change quite a bit. So we do have pricing data next week. We have CPI and PPI coming. So that Tuesday the 9th, with PPI markets looking for a 0.5% increase month over month for PPI core and the headline. And then on the next day, in the 10th, CPI comes out core. They're looking for a 4% year over year increase. They don't publish expectations for the headline, but the chart does show we're still below resistance of 5.4%. And if you extend the line back from 1925 to 75, 50 years, we're still below resistance. The PCE, the personal consumption expenditure headline release, came out on October 29th at 4.4%, just below that July 2008 high and below the September 1990 reading of 5%. 30-year yields well below upside channel resistance around 2.7. Last was a trade of 1.198. So the interest rates have been downtrending pretty much since I've been out of diapers, pretty much as old as my daughter is. So we're a far way away from breaking resistance. Commodity inflation does continue. We are overweight some energy in our growth portfolio, which is kind of interesting for us. Coming in here the last couple of years, in my personal portfolio, we've been very overweight technology with XLK and QQQ and semiconductors like NVIDIA and AMD, but we do have a pretty good weighting in energy. You can see here we have 11.71 waiting at the end of October. Crude oil has broken downtrend resistance around $73. Acts well. We're going to continue to ride this train while crude oil continues to go up. Inflation continues to be a threat. I'm kind of in the camp that, look, the demand side of the equation is there. Demand was in place pre-COVID. The Fed came in, showered the economy with trillions of liquidity, only pushed this further. But what happened is too many supply chains and too many companies tooled down right after the onset of COVID, got caught with a proverbial pants down and said, uh-oh, we didn't need to ramp down supply. We need to ramp up supply. So they're working hard to retool that. Semis is not something you could just turn the switch on and build out chips. So I think it's more supply side creating this transitory inflation issue, which I believe with demand there and a strong economy that we had prior to COVID. During COVID, unfortunately, there was damage done. We lost a lot of lives, but demand is still there. We're in a tech bull market. I think the third major tech bull market from number one was Industrial Revolution. I think number two was the first tech run into 2000. I think this is the third. So speaking of, let's look at the value growth sort of debate. So take a look at the next chart. So this is growth into value ratio, right? So it's one divided by the other. If this chart's going up, the first one is, this would be the numerator, the upside, is outpacing the downside, which is the denominator. So what this means is if you look at this through the last year or so, we've been mostly range bound, kind of bouncing back and forth, but just recently growth broke out relative to value. It's almost kind of an inverse head and shoulders here as it's breaking higher. So this is like technology, this is consumer discretionary, this is communications, this is the new age stocks that were leading, as I said, prior to COVID, during COVID and the stay at home, and now as we're emerging and the economies are opening back up, we have resumption. If you take a look now at the RRG, you can actually see that growth here on the monthly has been rotating out, but just recently it started to hook up. So growth is starting to hook up here, which indicates if it starts to head back up to the top right, that's a good thing. It's starting to lead the benchmark, which I have as the S&P, and the value over on the left side of the screen starting to hook down. So just more confirmation that growth is rotating in, value is rotating out. And again, this is the new age market that we really like to trade. Going over to the RRG, and this is the monthly of the large cap growth in red, the mid cap in gray, and the small cap growth in green. And what you can see here on the monthly, the red one is starting to hook back up to the right, which that's a bullish sign, right? So this guy is starting to head back to the right, large cap outpacing even medium and small. Up here I'm showing you in green, the smalls are over to the left. Gray, not much happening, but look at that red, large cap growth. It's starting to kind of arrest that downward move and it's trying to head back up on the weekly. That'd be a great confirmation that we're moving back into a strengthening trend in large cap growth. The next one we're going to look at here is the 10 major sector spiders. So, right, these 10 sectors make up the S&P 500. You can see technology is all the way to the right relative to the other 9, but it's starting to lose some momentum by traveling left. But look at XLY there in purple. It's been moving left, but it's starting to hook back up, which indicates we might be ready to rip. And then look at this on the weekly. That guy is heading straight up and to the right, a 45-degree, northeast heading. That's indicating a lot of strength. And you got to think there's a few stocks, and it's probably one at the top of your mind that might be leading XLY to consumer discretionary, which is Tesla. Is just absolutely ripping. Once it got through 1,000, man, it just ramped. 1,200 at the close. We have some pretty big upside targets. Tesla is the largest holding in our growth portfolio at Inside Edge Capital Management. We started this month at an 8.5% holding in Tesla. It's upwards of about 11 or 12, so it might be time to rebalance here. But if we look at some upside targets here using Elliott and Phibbs, some technical targets, I've got clusters. The first one between $1,800 and $2,100 a share, and then if things really get frosty, up around those 3 green Phibb targets, and I'm kind of going old school with the Elliott and Phibb, 3,400 to 6,000, massive upside target. So fundamentally speaking, it's a $1.2 trillion market cap company. It's trading 195 times forward 2021. So what the 21 earnings were estimated to be at $6.12 a share, right? So you take $6.12, divide that into the $1,200 closing price today, you get $195. Next year, they're expected to make, analysts got them at an $8.28 per share for 22, which puts you at 144 times forward earnings. It's unbelievable valuation, but there's been so much money lost by shorts sticking to their guns and or not being long based on the obscene valuation of Tesla. But if you take a look at the recent quarter, earnings per share, there's $1.86. They beat estimates of $1.61. And if you look at the percent beats in the last 18 months, you look at the percent that the actual earnings per share beat analyst expectations, it's unbelievable. So strong move in Tesla. Lastly, let's talk about Facebook. We hold this stock in a growth portfolio. Haven't done much with it. We're about break even on the position. There's been a ton of bad news hitting Facebook, and I think it's justifiable, rightfully so. A lot of privacy concerns. The company's got a 10-year history of issues with privacy, and I think they're finally starting to address that as they're rebranding. They're changing their name into Meta as they're going into the metaverse, virtual reality. I'm a huge fan. I did the VR goggles over there. I did a video for CNBC where I actually went into virtual reality using the Oculus goggles. You can actually, with this, with the future, I think of what's going to happen, you can take your monitors, literally put the goggles on, and you can break them apart and trade, exist, interact, conduct business in virtual reality. So I think it's unbelievable. So maybe the first options trade in history. About something like this. These big things on my face are the Oculus 2 VR goggles from Facebook. Here, pretty cool. This is unbelievable, guys. $190 at risk to potentially make $710 on that call spread. Right around earnings, review trade, place order, and that is filled. Maybe the first options trade in virtual reality. Let's go back to the beach. Maybe it's time for happy hour. All right, so just editing this video. One thing I forgot to say is the daily chart on Facebook looks like it's pretty good. It's kind of pushed below the 200-day moving average. Seems to be carving out kind of an inverse head and shoulders. And as I said, a lot of bad news out there combined with an okay technical picture. It's pulled back. I think it's still solid, and I think there's a lot of hope for what they're trying to do with rebranding themselves. And they also just announced today that they are discontinuing facial recognition software, so sort of along those privacy concerns. Anyways, hope you enjoyed the video, guys. A lot more content. I'm sorry this was a long one. Need to break these up. We'll get more communications out to you from both Ryan and myself. Thanks for watching. If you made it this far, if you don't mind, throw a thumbs up on that video. Throw a question, comment, insult, whatever we can do for you. I'll see you guys in the next video update. Have a good one.